Hello, Julenn Keeling here, Associate Broker with Berkshire Hathaway Home Services Town Realty, located right on the coast in beautiful Hampton Roads, Virginia. Welcome to Chapter 111 in my first time home buying series, and today we're going to discuss what is a Mortgage Credit Certificate or MCC. I'll go over what it is, why it's important, and most importantly, how do you get one? And be sure to stay tuned to the end as I will have money-saving bonus tips throughout, as I'm always presenting you with options and producing results. Let's jump right in. The Mortgage Credit Certificate or MCC is a dollar-for-dollar tax credit. Now let's take a moment to distinguish what is the difference between a tax credit and a tax deduction. A tax credit takes off the actual amount of whatever the tax credit may be versus a tax deduction in which you would only be able to deduct a certain percentage of whatever the tax deduction is. Now, I am not a CPA or tax advisor, thus please do consult your tax advisor or CPA for the specific ins and outs of whatever your financial situation may be. Also, what I will share is based on vHDA's MCC, as there aren't a lot of lenders that I'm aware of that will actually do an MCC outside of the vHDA program. Now, that doesn't mean that they don't exist elsewhere, but the one that I'm most familiar with and is most common to me is the one through vHDA. The vHDA MCC allows you to be credited up to 20% of the total amount of the interest that is paid for your mortgage within a year's time. The remaining 80% of the interest is still able to be deducted as a tax deduction, and this is what most people think of when they think of a tax savings for when they purchase a home. For example, if you paid $10,000 in interest in your mortgage payments, then 20% of that for your MCC would equal $2,000. Now, the $10,000 is not the total amount that you paid in mortgage payments, but just the amount that is paid for interest. Now, let's say you do your taxes and you owe $5,000 to the IRS. You would be able to deduct your MCC of $2,000, which would give you a remaining balance still due to the IRS of $3,000. If you don't owe any money to the IRS, congratulations, but you wouldn't be able to use this MCC credit of $2,000 as a sort of negative balance or credit for any future obligations you may have. The MCC is a yearly tax credit that is able to be utilized for as long as you own your home. Over the life of the loan, it could literally save you thousands and thousands of dollars in just this one credit. This is truly a benefit and a bonus to utilizing the vHDA loan. Bonus tip: just in case you missed it, I wanted to re-emphasize that with the vHDA's MCC program, not only would you have the MCC as a tax credit, but you would also still be able to do the tax deduction that is standard with a mortgage. Now that you know how wonderful and useful an MCC is, you're probably wondering, well, how do I get it? Well, you would have to qualify in the following 3 areas. 1, you must be a first-time home buyer or not owned a home within the last 3 years. 2, you must meet income qualifications. This means that your monthly income cannot exceed a certain amount. One thing to note is that this amount may be different from the amount that you use to qualify for the initial vHDA loan, and I would suggest speaking with your lender to clarify and make sure. 3, the lender would have to fill out all of the paperwork and get the MCC in place before you close. Just because you're utilizing the vHDA loan, it doesn't automatically enroll you into the MCC program. Your lender has to get permission from you first, and you actually have to opt in. You can claim it every year as an annual tax credit, and you would do this by downloading IRS Form 8396. Also, about a month after you close, be sure to be on the lookout as vHDA will send you your MCC in the mail. There is info on the MCC that you will need in order to be able to file it, thus I would recommend keeping it in a safe place or scanning it in so that you will always have it at hand. The MCC will have the MCC number, the credit rate, and the issuer, which of course in this case would be vHDA. You will also need Form 1098, which comes every year from your lender, which details out how much interest that you've paid over the year. This will come about the same time as you would get your other tax documents, such as your 1099s or W-2s that you would need in order to normally file your taxes. One thing to keep in mind is that there may be a recapture fee. If the home is sold within the first 9 years of you owning the home, then a portion of the MCC may be due back. Again, please be sure to consult your trusted tax professional to get the ins and outs for your specific financial situation. If you would like more info on how to get a vHDA loan so you can utilize this wonderful MCC, please be sure to check out the description below, and I'll put a link for a video that goes more in depth on just that. I hope that you have enjoyed the content and learned a little something along the way, as my goal is to always educate my first-time home buyers throughout the home buying process. Please give me a thumbs up to like the video and share with a friend or family member that you think may find the info helpful. Also, comment below with any questions that you may have and consider subscribing. I will be putting out weekly real estate info videos. Thank you again for watching, and I look forward to connecting with you again soon. Bye!